Welcome to the channel Get Rich. Today, the company I am going to analyze is Tata Elxsi. I split the analysis into three parts. First, looking into the Tata Elxsi business, and then going into its financials, and finally, the main part, which is valuation, where I tell my price target. So, make sure that you watch till the end. So, first, about the business. So the business Tata Elxsi is operating in is ER&D. So what is ER&D? So it's engineering, research and development. So Tata Elxsi is a high quality engineering research and development service franchise facing industry headwinds currently. They are an integrated design and engineering services company with automobile, broadcast and communication being key vertical. So how does it work? So traditionally all the manufacturing companies and all other companies, they do have research and development on their own, but recently they are starting to outsource their research and development to other companies due to the rising demand of cost reduction and because they have a shorter project life cycle. So ER&D outsourcing continues to be underpenetrated with large growth opportunities across industries supported by businesses moving to platforms, data monetization, artificial intelligence, and etc. So it has been growing at a faster rate than traditional IT services. And large service providers and private equity players have been increasing their share in this segment inorganically, but the market is highly fragmented since top 10 players accounted for only 1/10 market share globally. So when we have a look at the total global R&D spend for engineering, so we see the trend. So in commercial year 17, we see $700 billion of R&D spend, and in commercial year 18, so we have $782 billion of commercial spend. Look at the company's valuation. So Tata Elxsi revenue is around 200 to 250 million dollars. So it's quite a very small share it's taking from this, but it has a huge opportunity. So next we are going to see is the key business segments of Tata Elxsi. So first one is automotive. So automotive industry, they have a huge market share. So their revenue has 52% of their revenue is coming from their automobile vertical. And then the second biggest revenue share is coming from media and communication, and the third biggest revenue share is coming from industrial design, and then the healthcare, and then they have little bit of system integration and so on. So let's go into automobile business. So what do they do in the automobile business? Let's have a look. So the company is investing to grow in the large addressable areas of autonomous vehicle, connecting vehicles, or like connectivity, and electric vehicles. So Tata Elxsi is working with its automobile clients in high growth areas of infotainment, active safety, electric hybrid, body electronics, and connected cars. So look at this. So they are working in telematics and infotainment. So they have in-car connectivity, navigation services, and they are also working in powertrain and hybrids. And they are also have work. They are working in safety and security, and so they are working in most of the software and software parts and other things. So they are also working in driver monitoring system, intersection collision warning, digital dashboard, functional safety modules. These are their key services. So what are their scope? Their scope of the work. The scope of the work is in autonomous cars includes they develop the algorithm, they integrate the system, they validate and test the algorithms developed by some other people. So the other big thing in the automobile vertical is their software. So they have an automated software platform which is called Autonomy, which is they licensed it to one of the top 5 global OEMs for driverless cars. These trials are undergoing in Germany, but they don't disclose which company is it. But many people are having suspicion it's Volkswagen. But yeah, so these platforms, they have high scalability, so they can provide long headroom for growth, because this can be used by several OEMs and several car manufacturing companies, because they have the automated platform for autonomous vehicle. If you are confident in autonomous vehicle in the near future, this can be a very good play. So then look at their portfolio, automotive portfolio. So out of the automobile revenue they are getting, 35% of the revenue they are getting it from JLR. So it's JLR is, that's a Tata group. So it's a Jaguar and Land Rover. So they are getting almost 35% of their revenue from these customer. And then they have other tier 1 auto companies. So from those people they are getting 49%. So who are they? So it's Ford, Nissan, Hyundai Mobis, Bosch, and they have like many other companies. They are also having like revenue 16% from other OEM businesses. So let's look at the automobile industry as a whole. Currently, they are having some industry headwinds, because they are having problems with their JLR customer, because their revenue is keep on reducing, because they are already in a very bad state now, because they are in Europe, and they are based in United Kingdom, and then these all Brexit things, they have like huge uncertainties there as well. So despite strong domain expertise in the automotive vertical, growth prospects have been dented by the project delays. So these main customer, JLR. Also, if you look at globally passenger car sales have been challenging for the past year. So you see here in the graph, you can see the declining growth of global vehicle sales. You see the global vehicle sales is going down, and you see China, US, Europe, everything, all the global vehicle sales is going downtrend. Industry is facing a headwinds. So they have, since they have sales drops, revenue drop, they are going to reduce their research and development expenses as well, which is going to impact Tata Elxsi's revenue. So that's why they have a huge headwind. Also, you see the Tata Elxsi is benefiting from reallocation of R&D budgets, because these car manufacturers, when they are having this downtrend, they will reallocate their R&D and expenses. So what do? So they are converting it towards embedded and electronics. So the larger investments are directed towards autonomous connectivity and shared mobility. So it's a good thing for Tata Elxsi. So next thing is electrification. So electric cars. So you have electric cars is coming. For example, you see auto majors, they are targeting electrification of their product portfolio. Volkswagen has targeted nearly 50 new electric vehicles by commercial year 25. Currently they are selling just zero point 0.1 million electric vehicles, but they are expected to reach zero point 0.5 by 20 commercial year 2020, and then they want to increase it to 50 new electric vehicles by commercial year 25. And Daimler expects their electric models to account for 15 to 25% of sales by commercial year 25. Ford plans to spend $4 billion till commercial year 2020 in autonomous vehicles. So these people, they are having huge R&D expenses in autonomous vehicle and electric cars. But how this electrification helps Tata Elxsi? So in order to answer that, Continental expects software function in vehicles to increase by 10 times, and so it plans to increase its software professionals substantially. So, and also auto majors require faster time to market for their products, which supports a growth opportunity for the vendors and service providers. So here is where Tata Elxsi can help them, because they can give them shorter life cycle, they can give faster time to market, and they have their strength in the software functionalities of the car. So that's also going to increase by 10 times. So it's basically higher revenue from the same customers. And then if you see the electric vehicle sales, so that the global total vehicles sales dropped, but then if you see the electric vehicle sales, look at China globe, electric vehicle sales went up by 78%, Europe 34%, and America 79%, Japan 6%, others. So in total global sales of electric vehicles, it went up by 65%. So electric vehicles are still doing very well. So then now these are their automotive business. Then they have their second biggest segment, which is media and communication. So what do they do in media? So Tata Elxsi works with leading content providers and MSOs, equipment manufacturers. So these people, what are they doing? They are providing testing and automation services for these clients. So they have huge client base. So if you look at the customers they have, they are like huge names, high profile companies. So they have a lot of room to get more revenue from these segments. If they really like their services, they can literally increase the sales. So the next thing is communication. So if you look at the communication vertical, so they are doing in the network transformation, unified communication. So they are doing VoIP, video conferencing, and SAP based enterprise communication, cloud collaborations, Internet of Things, cloud computing. So they are doing all these things. So if you look at some of their customers, look at it, it's Comcast, NOS, Portugal, it's Sky. So it's a huge companies they have as their customers. So they can tap more revenues from these customers. So the next thing, if you look at it, they have their own automation software for media and communication as well, which is called Falcon Eye. So it supports operators and broadcasters for automation of testing, workflow, and monitoring of content access platforms. So this IP has licensed to 6 providers, 6 operators, and supports the rollout of their contents across devices, and is used as a tool to measure quality of UX, like their screening stuff. So if you see here, so they have 3 products. So they have not only have testing product, they also have a product for monitoring and multi-screen. So these things can give more headroom because it's IP based revenue. If it is licensed, so it can get huge in no time if it gets going. So the next thing, if you see here, is they also do some kind of design for some semiconductor companies. So they also do VLSA design, verification, and validation service. They do platforms and application software services for these semiconductor device. Look at the names, the customers they have. It's Intel, NEC, Fujitsu, Broadcom. So these are their one of the some of their customers. So they have a huge customer base. They can tap more. So then some of their products, so they have their includes, some of the products includes like C Entertainment OTT, which has been powered by Tata Elxsi. The company has also developed and integrated key software components for Airtel Internet TV, and the global partnership on Android with Google, and Google Cloud partnership for integration of their Falcon Eye IP with their cloud. So it's these are supporting their growth in this segment. This can be a huge growth opportunity as well. So then look at the next vertical. So the next vertical is industrial design business. So these services include product design from Castrol, Orion, Panasonic, and other packaging design, user interface design, service design, like they are doing it for Kochi Metro, Airport Authorities of India, and prototyping. So here if you see, they are doing packaging design, service design, product development, product design, and visualization services. And then some of their customers, you see their customers include Panasonic, Marico, Kochi Metro Rail Limited, Airports Authority of India. So these are some of their customers. So but the problem in this segment is the average engagement size per client in this segment is very low at just $200,000. So they should get more revenue per customer. They are just getting started, so if they could do well, then they can get more revenues from these customers. So then the next segment is healthcare. So the healthcare segment is the fastest growing segment for Tata Elxsi. They provide medical service devices engineering like infusion system, wireless stethoscope, healthcare technology, quality, and regulatory compliance support services. So the scope includes developing image processing algorithm, integration of user interface, software and hardware compliance to medical device regulations. But the management expects this segment to increase to 10 to 15% of revenue over the medium term. Now they have the healthcare is just 6% of their revenue. They are expecting the revenue to increase to 10 to 15%. So this is one of their high growth business vertical. Then let's look at the growth opportunities of Tata Elxsi. Where can they grow? So first, they have two IPs like Autonomy Platform and Falcon Eye, one in autonomous vehicle and the other one in media and communication testing framework. So look at the revenues from IPs. So in financial year 16, they have 2% is coming 2% of their revenue is coming from these IP businesses, and now in financial year 19 they already get 5% of their revenue from the IP business. Mind that they are growing at the past 3 years, they are also growing their revenues, but still the share of revenue is 5% from the internet IP business. Then they have strong client portfolio, so they have very strong client portfolio, so they can tap more revenue from these customers. If they could do well and the industry, if they have a tailwind, then they can really do well. So then the third one is geological expansion. They are planning on expanding in automobiles in China. So they want to expand their autonomous portfolio to China, and they want to expand their businesses, media and communication businesses, to Middle East. And Australia is also another geological that the company is targeting for their growth expansion. So the China is a great opportunity for Tata Elxsi with 200 brands, as several OEMs are looking to expand sales outside China. Example, MG Motors. The China also contributed to more than 60% of electric vehicle sales in commercial year 18, which is the fastest growing segment. So the Tata Elxsi has recently licensed its platform to Great Wall Motors, China's leading SUV manufacturer. So they are slowly moving into China and other verticals. And the third one is vertical expansion. So they can also extend within verticals. For example, now they have automotive portfolio, they can extend their automotive portfolio to rails and aerospace. So this can be a very good cross selling opportunity because they have their strong design expertise. They can cross sell it to other people. For example, they already have the customer base of Alstom, Kochi Metro. They are just doing now the product development and product design, but then they could easily sell their other software services and other products, platform products, to them as well. They could do cross sell. So now, risks. What are the risks involved in Tata Elxsi? So since they are mainly based on research and development expenses, now if you look at the current crisis, ongoing crisis, everybody, the demand is totally going down and everybody wants to reduce the costs. Think where they want to reduce that cost first. Of course, the research and development, they are going to just touch the research and development expenses to be shut down, so that the Tata Elxsi revenues will go down, because they are not working in the main core consumption area or something. So this is they are pure ER&D service player. So that is a key risks, that can be a key risk, but it can be mitigated. For example, in this is a short term, but in the long term, always, if the company wants to survive and thrive, they should do research and development in autonomous vehicle, connected vehicles, and other researches. So they have their strong expertise in these areas. Then let's look at the geographical mix revenue. Where are they getting their revenues from? Look at their revenues. They are getting 30% from North America, 55% from Europe, and 15% from rest of the world. Another key risk is here. Look at it. They have 55% of the revenue is coming from Europe. So most of the revenues are based from United Kingdom. So and there are like a Brexit and a lot of uncertainties. So this is also their one of the risks associated with Tata Elxsi. And the other thing is top account concentration. So look at the account concentration. So in the first graph, you could look at top 10 account concentration percentage of the revenue. So they have 50% of their revenue is coming from top 10 accounts. So it's okay. It's in par with some of the companies like Persistence, Mindtree. So it's okay. So then look at the top account concentration. So they are getting 18% of their revenue from one single customer, which is JLR, as I mentioned below, as I mentioned before. So, but some of the players like Mindtree, Persistent Systems, they have even more 20%. So it's okay, but then since JLR is also in trouble, so it's also one of the risks we should think about before getting invested into this company. And then now coming to the financials, now we are going to getting into the financials of the company. So the revenue growth in USD, $1 million. So if you look at the revenue growth in financial year 15, they grow by 9%, they grow by 18% the next year, and then 12% and then 16%. Now they just grow 6% in financial year 19, and financial year 20 they are projected uh, growth is 6.8%, and 21 is 11%, but I think they are not going to grow even to 6%. Looking at the current scenario, they are not growing at all in financial year 20, and financial year 21 also they will not grow much. Maybe from financial year 2022 they grow by 10-15%, 2022 and 2023, but now with this crisis they are not going to grow their revenue. They could not able to grow their revenues, I think. That's my point of view. And then look at the profitability. So how do they grow? They have their EBITDA margin, it starts around 21%, and they went above 25%, and now it's slowly getting down. And look at the PAT margin as well. They started growing from around 12% to 15, 17, 18%, and now it's dropping. So we have to know why the EBITDA margin and PAT margin is dropping. So when we look at the utilization rate of the company, so you see the utilization rate of the company, they are doing a lot of hiring, so they are expecting the demand to come. So their utilization percentage is constantly dropping from 81%, 78%. Now their utilization rate is just 72%. So they are not utilizing the rest of the people. So that's a problem they are facing with EBITDA margin. So when once they have their demand back up, and if they can have higher utilization rate, then I think their EBITDA margin will go up in the medium to long term, but not in the short term. So then balance sheet. Look at the balance sheet. So they have the current assets. So in 2019 they have current this is in a billion INR. So it's total current asset they have around 1000 crores. So total current liability is 187 crores. So it's they don't have any liability at all compared to the current assets. So if you look at the total non-current assets, so that's 135 crores, and total non-current liability, they don't have much non-current liability. So they don't have any debt at all, and they have a lot of cash. They have 1000 crores. And in this crisis, lot of companies, small companies, they are like their shares are crashing if they could not sustain because of the liquidity constraints. Tata Elxsi can acquire some of the small companies because they have a lot of cash sitting in their balance sheet. They could use it, or they could use it for as a safety, because I don't know how long this crisis is going to last. So yeah, they have a lot of cash and they don't have any debt, so for sure they will survive this crisis and then they will emerge stronger, but it just takes time. So then look at the operating performance. So their return on assets is 24% in 2015, and currently in 2019 they have return on asset of 28%. And look at the return on equity, it's 40% in 2015, and now currently it's 35%. And return on investment capital, that's also 32%. It's a very good thing. They have a very high return on asset, return on equity, and return on investment capital. That's a good thing. And then look at the shareholding pattern. So if you look at the shareholding pattern, 44.5% is held by the promoter, and institutions hold around 10%, 12%, and other public is holding around 44%. So if you see the promoter holding, it doesn't change much. So promoter is still holding the same percentage. But when you look at the FII and DII, they reduced a bit. So that's also a concern. They are not buying into the company, but they are selling, but not a lot, but they are still sold. FII plus DII holding is still reduced. So mutual funds have decreased their holdings by 1.3 percentage of holdings. So institutional investors have decreased their holdings by 1.4% in December 2019. So that's also a concern. So they are also selling. So this is not this stock is not resilient to the current prices, because that's of course because of they have like lot of headwinds, and it's going to take some time to get back the demand. So then finally we are coming to the valuation um area. So now if you look at the valuation chart, so this is a Nifty IT index valuation chart. So the average Nifty P, like Nifty IT P of the all IT companies in the Nifty, so it's around 17 average PE. They have around 17 PE as average Nifty PE. And then if you look at the Tata Elxsi 1 year forward PE, so it's a lot of ups and downs. They went until 40 PE, and then they went down to around 15, and then they went around to 26. But if you look at the average PE, their average PE is around 23. So 23 is their average PE, but currently they are trading at 15 PE. So let's go into the revenue projections here. So their revenue, they into financial year 2016, they went from 1000 crores, and currently they are in around 1600 crores. But as I said, I am not expecting their revenue to grow this year, financial year 20, next year, financial year 21. But then from financial year 22, they can grow 10 to 15%. So I took 10% revenue growth. So EBITDA margin, they have very low EBITDA margin now compared to their historical some of their high EBITDA margins. So now currently they are trading at 21% EBITDA margin. So they can go to 22 and 23, but not in the short term, but they can do it in medium to long term. So the price target, coming to the price target with current valuation, so 1 year from now they could reach 656 rupees, 2 years from now 750, 3 years from now 822. Currently they are trading at 600, around 600 rupees. So the price growth can be 1 year you could get 9%, 2 year you could get 25%, 3 year you could get cumulative 36%. So this is a pessimistic approach, pessimistic calculations. But if you think if the PE can get back to 23, which I think it will, but then not in the short term, but in the medium to long term. Around if you have a look at 3 to 5 years of holding, then yeah, the stock could re-rate to 23, even to 25 or 30 if there's some kind of optimism comes in. But then if you estimate the target optimistically, so in 1 year they could go to 1000 rupees, in 3 years they could go to 1260 rupees. So if you look at the price growth, so in 1 year 67%, 2 year 91%, 3 years is 100%. So the stock can double in 3 years if it is optimized target. But then my personal opinion is, if you have a short term outlook, don't buy the stock. If you have a medium to long, like 3 to 5 years outlook, you could buy this stock, because they have like some margin of safety, they have a brand, and they have a backing of Tata Group. So it's a good company for medium to long term, but don't buy it for short term overlook. Yeah, that's my analysis. So this is my personal opinion. Please do your own due diligence before investing in this stock. Thank you. Have a nice day. Bye bye.